Another major important central bank, globally speaking, is the European Central Bank, founded in 1998. The ECB is the entity that helps to coordinate the euro system, which is effectively a network of national central banks, which issues the common currency that they use, the euro. The ECB also conducts monetary policy and maintains the pan-European payment system. What's interesting about the ECB is that it is, like the US Fed, somewhat of a network central bank, composed of a variety of entities who coordinate their activity in order to deliver on their policy objectives. Unlike the Federal Reserve System, though, each of the component banks is not necessarily domestically controlled or operating under the purview of a single sovereign. Each country that participates in the European central banking system still retains its own national central bank, who effectively are the ones who own the European Central Bank. Since most national centrals are owned or controlled by their state, this means, of course, that the ownership of the ECB is in large part the governments of European states who are using the euro. Now, of course, it's worth noting that not all national central banks are owned by their states. We do have organizations like the Bank of Greece or the Bank of Belgium that permit outsiders to own pieces of their national centrals. But for the most part, it is the governments of European countries that control the European Central Bank. Now, just like in the US Fed system, there was a requirement for individual components or individual members to buy into the system. So in this sense, because the those institutions buying into the system were the national central banks of the various member states, they had to buy in proportion to their population and GDP. Notably, those members who wanted to participate in the ECB who were using the euro as the currency were required to contribute more. Similarly, the national central banks who participate in the ECB system pay every year into a reserve fund that helps to smooth things over in years where the ECB system loses money. Now, control over the monetary policy, which is the ECB's primary focus, lies with the Governing Council, which is made up of the heads of the various national central banks, 19 of them that participate in the system, as well as the ECB's Executive Board. The Executive Board is comprised largely of technocrats that serve 8-year terms appointed by the European Council, which is part of the governance system of the European Union. And this Governing Council, made up of a total of 25 members, acts by simple majority. Now, an important aspect of the treaty for, foundational treaties for the functioning of the European Union contains an important statement in Article 130 that describes the arm's length requirements for the ECB, which is that it is not allowed to listen to or be influenced by national central banks or any other body that I'll read to you the specific quote from Article 130 that really lays out the compromise that was required to have all of these different countries agree on a common central bank that would look out for their shared interests. It says that when exercising the powers and carrying out the tasks and duties conferred upon them by the treaties and statutes of the European system of central banks and of the European Central Bank, neither the ECB nor a national central bank nor any members of their decision-making bodies shall seek or take instructions from union institutions, bodies, offices, agencies, or from any member of a member state or from any other body. And the reason for this is that they wanted to focus on a purely technocratic affair that would focus on the stability of the currency. The ECB, interestingly enough, is not required to act as a lender of last resort. It's not required to maximize employment. It has a very narrow mandate specifically, which is to maintain the stability of the purchasing power of the euro. In this way, we don't have to worry about monetary policies that are appropriate for Spain but not appropriate for Germany as we try to maximize employment in one part of the continent to the detriment of another. The ECB, in that sense, is a form of compromise between both governments and national central banks to try to find common ground that they could all agree on. And one of these common areas that they wanted to agree on was the issuance of a supranational currency, the euro, and that required that there be an organization to manage the monetary policy of all of the member states. Now, in addition to managing monetary policy, the ECB also is designed to help facilitate cross-border payments. Their backbone payment system is what they call Target 2, which connects all of the member central banks to one another and allows them to borrow from one another in unlimited quantities. This is an interesting position. It's very similar to the ISA, or the Inter-District Settlement Account, that the Federal Reserve System has. But unlike that system, there is no zero date at which all of these Target 2 balances need to be cleared between the member central banks, which has allowed persistent inequalities to remain throughout the system, where we have regular financing of southern central banks by northern central banks uh, without necessarily having an opportunity to clear these balances. So let me show you a simple example of how Target 2 works out in practice. And it'll help to explain why they were able to avoid banking crises in countries like Italy, Greece, and Spain over the last decade. When European investors or depositors started to worry about the stability of Southern European banks because of the extent of loans they had made to Southern European governments, people started to withdraw money. And of course, if you try to pull too much money out of peripheral banks, what ends up happening is they need to borrow from their own local centrals, the Bank of Italy, Bank of Spain, etc. So what happens when the Bank of Italy starts running out of cash to provide for its member banks? Well, in that case, the Bank of Italy will borrow the money from the ECB. Where does the ECB get its money? It doesn't create it out of air. Instead, it borrows it from other central banks who are part of the system. In particular, the Dutch central bank, the Finnish central bank, and the German central bank, which has approximately $1 trillion extended to the other central banks in the Target 2 network at this point. So the Bundesbank is not alone in providing this, but it is by far the largest single creditor to the ECB system. So the ECB borrows money from the Germans, and where did the German central bank get the money from? Well, from German banks. Where did German banks get the money from? The deposits that were withdrawn from Spanish banks and put into safe banks in the north. So effectively what was happening is people were pulling their money out of Spanish banks, depositing it in German banks. German banks lent it to the German central bank. German central bank lends it to the ECB. ECB lends it back to the Italian or Spanish central bank, who then ensures that there is sufficient money to prevent bank runs on their own domestic institutions. But as I mentioned, there are persistent imbalances here, and this can create a real problem in Europe, particularly if anybody were to try to leave the ECB system with these massive debts still outstanding. There is no process in place for netting out these Target 2 payments and reducing them back to zero. And as you can see in the Euro crisis monitor link here, there are persistent and very, very large imbalances in the system between the member central banks of the ECB, which is definitely an issue that they'll have to address going forward if they want to be able to ensure stability in the system and maintain the confidence of the various members.